Hello everyone, welcome to Galaxydoc Market. This is Brandon. Today is May 1st, 2024, and bringing this video a little bit late. It's 7:56 p.m. Pacific time, and so it's about, I think it's about 10:56, almost 11 in the Eastern time period, and I had to gather some thoughts and get some slides together to present you some perspectives to help us trade for tomorrow. So we are trading the stock markets post FOMC on May 2nd, 2024. Obviously today when I make this video, it's May 1st, 2024. Fed basically signaled no rate cuts are in sight. Instead, they are now jawboning about accelerating the easing of quantitative tightening by July. So let's get into it and what does this mean on how to trade and also to discuss what happened. Pause this page, read the disclaimer. If you agree, please move forward. All right, so this is from Zero Hedge. FOMC leaves rates unchanged. And then they're saying that, oh, there's going to be bigger than expected quantitative tightening tapering to start in June and through July. So pretty much, and I agree with this article, the Fed just admitted that pretty much all of their efforts at, tightening or raising interest rates has led to pretty much an implosion, even though they won't admit it. It was sickening to go through Powell's pressers. Have you ever noticed that he coughs when he's telling lies? Just a observation, you know. I think he's got a conscience subconsciously. But the issue is that the yields are rising. Inflation is rising. And Yellen came out yesterday and said that inflation is a problem. She just came out of nowhere and told us that. Or was that all planned? We don't know, but it doesn't matter. News are after the fact. Regardless, Fed, Powell tried to be as dovish as possible in his statement. And for a while, the market bought it. Okay. So what do we do next? The sell-off, but will be sharp, but will not be without sharp intraday to multi-day rallies, right? Some will be rip your face off types. And I said this on numerous videos, and I wanted to bring this up because it is so true right now, more than ever today. So before we get into that, we know that Fed knows it cannot cut rates. They could never cut rates, and I don't think they want to. I think it's by design that while they put on the facade to you and me that they are very, very interested in normalizing rates, doing maximum employment, but that is further from the truth. When you look at the employment data, don't you ever find it once in a while that it's very, very wonky? Go back and look at previous employment data and you'll see what I mean. It's just like all made up out of thin air, mostly. So what I was alluding to is that, embrace the intraday rallies, because it's going to come. That will happen. So this blue line is when FOMC released their policy. And then as Powell started speaking, we started to rally, did we not? And everybody was probably buying calls and didn't understand up into this area are very, very large amounts of unfinished business, I like to say, or unfinished auctions, if you will, of selling imbalances that present. There are sellers lurking in this area. And this was an engineered rally to basically allow, and look at the volumes as basically this came in. As this starts to sell off, it increases. Those are institutional selling, folks. And so who is buying this to the call side? Probably some dumb hedge funds, prop trading firms, as well as retail, I think. I'm not saying we're all dumb, but it's very easy to get fooled into that. So it's very important to understand that you needed to know your levels. And I've always talked about you have to know your levels. You have to know where your support and resistance levels are. It's a lot more complex than that. It is where exist what we call seller imbalances, which were up here. Okay, there was a lot of unfinished business up here. Okay, and it's going to gravitate down towards where it needs to be. So this is kind of what we call, revisit to the breakdown area, kind of into this zone right here, right? And it failed. And we knew basically on the SPY, okay, on the ES, we were talking about like 5120, 5127, which is equivalent to this general area. How many of you guys got suckered in today? It's not any accident, but this was predictable. So what were we doing as a group, in our membership group? Okay. So I said, hey, look, this is 11 o'clock. I said, Fed keeps rates unchanged. I said, there's no surprise here, and we're rallying. And I basically called for what? Patience. All right. I said, anticipatory pump ahead of Powell's speech. Okay. And then we had our inflection points, and we were talking about all of that. Those you'll know that inflection points that we talked about are right here. And I said start nibbling on our positions. These are kind of our positions that we've had. I'm not going to tell you our, strikes and everything that we had. But I was saying if you missed SMCI, now's the time to add into that. But we were adding into our ESs right around. Look at the time. This is Pacific time, 11:56. I said 5-2 expiry. Now, is there going to be bounces in the pre-market and post-market in the ETH hours? Of course there is. I said, hey, don't worry, there's sell-off coming. How do we know this? Because you got to know your levels. You got to know where the sellers are. You got to know where the major zone of buying and selling is and pivot levels, and all of those are required. Otherwise, you're just throwing darts into the dark. And that's what we did. And we basically started to add to our shorts when puts on the ES were very cheap. Amazon was cheap. PayPal was cheap. Our SMCIs and Metas, all of those that we're holding. Okay. And yes, we did very, very well. Obviously, some of these are 10x trades. I mean, really, I mean, in a span of probably like 30 minutes. Okay. So what happened? It's a bull trap. Markets are priced for 3 to 5 rate cuts this year, and it ain't coming. What we're going to get is acceleration of taper of the quantitative tightening. What does that even mean? But anyways, the dead cat bounce is either ending or will end by Friday 5-3, which means that starting now, we can be looking for any type of bounces as a means to enter for the downside. Okay, will you be ready for the next down leg, or are you going to keep being a victim to the market, to the market makers, to the manipulation that goes on? Okay, because if you're just putting on trades and praying, it's not going to work out very well. This is a very difficult market. Okay, so let's look at one more thing. So this is the daily, and I have not adjusted my buy and sell zones. And what did it do? It got into that sell zone, did it not? It hit the 20 SMA, and it got rejected today. This is today's action. It's basically a little hanging man, or very bearish sign indeed. Basically what we have is extension into this next sell zone, which is going to be right into the 494 to 493 level. Okay, you can convert this easily to the ES. Now, is it going to go down in a straight line? No, it's not going to do that. Okay. Markets will revisit previous breakdown areas. It waxes and wanes. Okay. And it backtests and it ebbs and flows and goes and fills these levels. It does not go up or down in a straight line. It continues to test support and resistance levels, or what I call areas of unfinished business. Okay. So what do we have here on the SPY? And I'm just going to limit it to SPY for one thing. One thing I started noticing is that I know that the PPO ADX on that last video I said was looking bullish, but now we're basically forming this type of formation. Any type of these formation, that's bearish, folks. Okay. You want to see stochastics? Bearish, right? And I said, hey, the previous video, hey, this might be a inverse head and shoulders. We got a little pop, but basically we really could not break above that previous area. What are we doing in terms of accumulation and distribution? Look, we're coming down. Okay. The fact that ATR is at the top end of the range means that we are going to get a reversal from the primary move, which was a rip your face off rally that failed. And it failed at the late in the day. What does that mean? That means that was institutional selling. Look at these volumes if you don't believe me. Okay. Today, This is a pretty hefty volume, okay? You don't see the buy volumes being that heavy. That's because we are in the middle and on the crux of selling off, okay? So we talked about some levels. Please check out my previous video on that aspect. I do want to go over a couple of things, okay? Number one, Meta. Folks, Meta reported, earnings and the pretty bad earnings, right? And we've had the gap down, and basically now it's forming this what I call descending triangle. What do you think it's gonna go? Buy some time and enjoy the ride down once the market becomes impulsive. And a lot of people were reluctant to get into Meta because it's been holding up so well over the last year or so. Okay, bigger they are, the harder they fall, folks. All right, this is just giving it to you on a platter. Here's Amazon. All right. Do you see something weird? Look at all these black candles. These are reversal candles and it cannot break higher. Amazon, while reporting great earnings, just like I told you on Google, okay, and then watch my previous video, and Microsoft, and now PayPal's joining the action. They reported great earnings. They popped and then they dropped, and then they're going to continue to grind down. And today was that sign that after FOMC, that the market is not completely sold on whatever BS that the Fed is telling them. Okay. The other one that I want to continue to keep an eye on is obviously coin. Okay. Coin's got a lot of move down, and these are all targets. Okay. And it's a pretty gappy stock. There's some mini gaps all over the place. But realistically, when you look at this, everything is pointing down towards to the downtrend to continue. And there's a lot of meat on this bone, folks. The other thing that I want to help you notice is that while this used to be a bullish sign, now we're just turning again, right? We're doing this kind of action. Okay, so this kind of action is bearish. And then again, accumulation distribution, we've blipped right back down below. And then we're beginning to trend down after hitting the high levels, right? That means further continuation of the trend change to the downside. Okay, that's all that means. This is how you use these things. What's happening with NVIDIA? NVIDIA is basically, in a downtrend, and we're kind of standing over here. And that's a bearish doji sign. Okay, we basically had the RSI pop up, and maybe we're gonna come right back down. So this bears watching. If this turns, guys, this is gonna fall very, very quickly. All right, don't discount NVIDIA. You know why that is? Because SMCI, Super Micro. All right, what a name, right? Super Micro wasn't so super today. Okay, what does that mean? This is the weekly chart of Super Micro. Let me bring you the daily real quick. Okay, but already on the weekly, we're seeing a descending triangle that's forming. Guys, if we break through this 20 SMA, we're going down further. Okay, we are definitely moving down further. All right, sorry about the dogs. I mean, I'm not going to re-edit this, folks. Okay, my dogs are unruly and they're just whatever. Okay, so anyways, life of living with dogs. Okay, so here we go. So Rampage, let's see, SMCI Daily. There we go. All right. So what happened after the earnings, right? And I kept telling people on a pop, we want to add this. It's going to participate into this gap, and it's going to fail. It's going to fail after that 100-day moving average. There's a lot of space down here. And so I still think if you can fathom and buy the options right, because these are expensive. IV's pretty pumped on these because they are expecting huge moves, guys. All right. And so these are some of our favorite stocks that we've been watching, and we wanted to bring it up to speed for everybody. Okay. So what we have is that the FOMC rates are unchanged. Powell did his best to put on a happy face. And guys, there ain't nothing happy about it. And so what are we doing? Actually, I wanted to show you one more thing. What in the world are we doing in the after hours? Okay, remember, it's a very illiquid area, but we're watching this. My job never stops, obviously. All right. So a lot of you guys are probably looking at this and going, yeah, but it's bouncing and it's bullish, so I'm gonna go long and things like that. But folks, all right, generally this is basically a back test, and if you were to bring in, let me just do this real quick. I'm gonna bring up a Fibonacci real quick. Hold on. So when we look from the bottom, it's going to probably do a retracement, maybe up to 50.85. Guys, that's just a 50% retracement of that move, which is typical after this impulsive sell-off. This is ES on a 1 minute basis. Realistically, you see the primary trend line here. I mean, really, but guys, if it goes up here into this 50% retracement, just maybe a little bit higher to 61.5 or whatever the case is, those are all shortable areas. A lot of things can happen, and there's that whole theory of it came in fast, it came up fast, it exited fast, and we're basically having that same type of scenario that's going on. So. For those of you that are late ES traders, there's a lot of good opportunities on the option side. Not financial advice. You do your own homework, okay? But I'm just showing you what is going on at this moment. Furthermore, I think it's very important to show you that all charts and stocks react the same way. Fed presser, this is coming right in. These are all very bearish things. I don't care if they go up. It's just probably going to go do this and fall off. Okay. We have some significant earnings release, and I'm not going to do that for time's sake. I mean, these are all bearish signs, okay, that are here. I mean, this sell-off at the end is huge. By the way, Amazon, guys, there's still a lot of meat left on this bone. You just got to know how to buy this thing, okay, without getting killed on it. So basically, the Fed is basically trying to control and bring down the 10-year Treasury yield. Okay, there's higher the 10-year Treasury yield, more stress on the bank and more failure. Remember, another bank failed, but do you hear any mainstream media talking about the fact that another regional bank has failed last Friday after the market closed? There's more banks that are out there that are in trouble. Okay, late day sell off on major index is institutional selling, right? Rip your face off rally is ending or may have already ended, and we're going to find out tomorrow. Okay, so you got to be opportunistic in the way you trade. You got to know your levels, right? Watch for relief rallies and bounces intraday. These are reparticipation of breakdown or breakup areas. Okay. Embrace the sharp bounces. Do not get fooled into going long like a lot of you did. I know those of you that are out there. Raise your hands, admit it. No, you don't have to, okay? But I do want to help, okay? So here's our watch list: SPY, QQQ, ES. Gold is along, guys. If you see gold spiking, that's a sign that the market is unstable. But also watch the dollar. As the dollar comes in during the day, that means a rally is coming. DPZ, Meta, PayPal, SMCI, Amazon, Apple, Tesla, and MasterCard. All right. Be aware of bear traps and bull traps. Okay. I'm telling you right now, a lot of bulls got hurt today, but a lot of bears got also killed today. Okay. Don't be one of those people. Either of these people. Know your levels. How many took advantage of the rip while Powell was talking either to the upside and then to the downside. Okay. If you caught both of them, my kudos to you. All right. All right. So the other thing is, we're new. I moved over from Rampage Trades. This is my own channel. Okay, I'm doing a lot of things very educationally. I'm going to be more the member focused. Okay, I want some good traders to come and trade and join our membership. Okay, like us, share us, and above all, comment. Make it respectful, but good and bad. I like them all. Thank you, and get some alpha. Subscribe if you want to inquire about joining this group. Coach Brandon at Proton Mail and schedule a consultation. I'd love to talk to some willing people that want to learn and want to contribute to our member sites. Thank you so much. Bye-bye.